And welcome to BQ Prime. I'm Hiral Dadia, and one segment that we are tracking right now is the industries which sees an impact on the back of lower crude prices. It could be positive as well as it could be negative. One such company is Philatex India. Clearly, if you see in terms of crude, WTI has traded almost 24% lower than the peak that we had seen in the month of April after the OPEC Plus went ahead and made the output cut announcement. Brent now is trading above those $75 per barrel, whereas WPI is above the $71 per barrel. What does this mean for a company in the textile space, which is Philatex India? Joining us on the show is Mr. Madhu Sudhan Bhageria, Chairman and MD at Philatex. Good afternoon, Mr. Bhageria, and welcome to the show.
Good afternoon.
Mr. Bhageria, my first question coming to you is polyester filament yarn is one of the main businesses that we are into, and clearly we have seen improvements specifically from a value added portfolio over the last 5 to 6 years. Uh, Taking the drop in crude prices into consideration, what's the kind of impact we are seeing in terms of the key raw materials, which is PTA as well as MEG?
See, the crude prices have dropped since last 1 year. They have been, and recently they have dropped quite a bit. I think last week and a half, they have dropped almost 10%. So the MEG and the PTA prices also drop, but not to that much. But they would drop, let's say, maybe 5%. MEG is already at a very low threshold, so it is not dropping. MEG is already very, very low, and the companies making MEG are not making profit. So that prices have not gone down, but PTA prices have followed the crude to some extent.
Right. So, what? Yes, continue.
The impact of this on the filament is not positive because when the prices are going down, then the buyers stop buying and the demand goes down. So eventually demand will rise, but once the price stabilizes and the buyer has a confidence there will not be any fall, then the demand will come and then margins also can improve going forward.
Right. So, that's from MEG and PTA pricing. How does it impact a company like ours? Does it help us improve our margins? And if yes, by how much? I mean, what percentage of our raw material or, cost is dependent on these two products?
It's almost 65 to 70% is dependent on these products, but then it's a pass through. Whether it goes up or down, we are able to pass through the cost. Only the transit time when it is going down, the pain is more because people don't buy and you have to sell cheaper to sell the product. But once it stabilizes, then you can get a slightly better margin. The margin will improve by 1 or 2%. It's not that they'll improve how much the raw material has fallen. So
Right.
they don't improve significantly, but they will improve because at a lower price, the demand is better. But once the prices stabilizes, then only the effect of the demand will come in.
Right. So another question, what I want to take as a follow-up is, as you mentioned, yes, there is a marginal benefit to a percent or a two in terms of where margins go. But when as you mentioned, it's a pass-through, whether it is up or down, how does it then impact the top line? Because clearly, the transaction value automatically moves with it, right?
Yes, the transaction value will move, and if the prices go down, the top line will also go down.
So,
In
so
our industry, the benchmark is always the volume of product which we produce and absolute EBITDA. Top
right.
line is never a benchmark in our kind of industry.
Right, absolutely. And that's something key which, I mean, as an investor, someone needs to understand that, these are the parameters then that should be looked at from an industry perspective. And overall, if you see from a raw material perspective as well, what is the kind of inventory that we usually keep to understand the cycle?
See, raw material inventory typically would be around, in PTA, we have around 8 to 10 days, and MEG, since most of it is imported, we have around 15 days stock.
Okay. And so, and what percentage overall in terms of raw materials is imported versus domestic? And is there a price differential as well?
Not much significant import prices because the local people also price it at the parity of the import. So there is very insignificant difference, maybe 0.5%. Import is costlier. And in PTA, we are 60% local, 40% imports. In MEG, we would be like reverse, 60% imports, 40%.
Right. And overall, if you see in terms of in between as well, there was anti-dumping duty on PTA, right? How is that looking like? Are there any, I mean, from the government policy initiatives as well, what is it that comes in as a support to our industry?
See, right now, there is no anti-dumping
Hmm.
duty on PTA or MEG. The investigation was going on for MEG, which DGTR has given a negative investigation. But companies who are producing MEG, they have gone in the higher court to challenge that. But right now, there is no anti-dumping, whether on our raw material or the finished product. But there is a lot of dumping happening of finished product from China, because Chinese industry is not doing too well. Their local demand is also not good, and also the exports are not very good. So they are dumping the product all over the world. That
Hmm.
is what is causing problem, and our margins are low. Otherwise, the industry could have a healthy margin of double digit EBITDA. But since China is dumping, the margins are low.
Right. So overall, as you mentioned, so from here on, what is the outlook looking like? What is the strategy going to be for the company, taking into consideration what's happening from a China perspective?
Yeah, I think China's supply would go down because some non-tariff barriers government is putting up. There's the BIS registration and certification which needs to be done. The last date for that is
Hmm.
3rd of July. And in case Chinese companies are not able to get that, then it will restrict Chinese imports. And also we are applying for safeguard duty to the government. So in case we are successful in putting some safeguard duties. Also, the local market of China should also improve going forward. So that will also help. So all these three factors should help us. And from I think Q2, we should have a better margins.
Right. And very lastly, overall, if you see, apart from the pricing trend, apart from what you see in terms of the overall business, on the value added side, how is the business looking like, number one? And what is the kind of capacity utilization? Are we able to maintain the kind of capacities that we were running at in spite of the China scenario?
Yeah, capacity utilization is quite good. We are doing around more than 90% in most of the products,
Hmm.
and but only the margins are under pressure. We are able to sell whatever we are producing. So that's the scenario. And as the in value addition, also the capacity utilization is also about 90%. So
Right.
volume wise, it's quite healthy, but the margins are only under pressure.
Right. So I think a few things that need to turn around as well for the industry, but overall seems to be a good sector to look at as well. Thank you, Mr. Bhageria, so much for joining us on the show and giving us those views, because a lot of sectors which are seeing an impact of crude, and from an investor perspective, it's absolutely necessary as to where the dependency comes in. Thank you. Stay safe and speak to you soon again.
Thank you so much for having me.